We all get excited when silver's price rises, especially over the course of a few days or weeks, but inevitably it gets smacked right back down again. Well, there may be one reason for this occurring that no one is talking about, but I'm going to talk about it here as we explore. I think we can all agree that silver's price should be a lot higher than where it is. Why? Well, because we have this, the Federal Reserve note, the dollar, which is losing value at a rate now of 3.2% per year. That's inflation, folks, and that means that silver should be higher than where it is now, but it's not. But there's a force that not a lot of people are talking about as to why this could be occurring, and that is deflation. That's right. Where is deflation occurring? It's happening in China, and it's been a slow roll for a long time, especially based off of their real estate market, which is essentially kind of collapsing right now. They're going through what we went through back in 2007 and 2008. So why is this occurring, and why are we seeing silver prices to the tune of $27 an ounce plus on the Shanghai Gold Exchange? And what about the arbitrage there? I think that is actually probably related as to why we're seeing silver prices so low. I think it's the natural market kind of forcing its way and say, hey, this is where it should be, and why you're seeing this arbitrage, taking advantage of these low prices. But let's take a step back and think about what happens in deflation. Here in the United States, our GDP is up. It is up to levels that most economists would say this is good news. But why is this? People are making purchases now before things go up even more. That's right. They're buying out of fear. It's understandable in an inflationary environment for them to do that. So they're making these purchases. But in China, it's the exact opposite. People are waiting for the prices to drop even more before they make a purchase. So they're trying to fight against that right now over there. And it's having an effect on prices. Less demand means the prices are going to go down even more because people are waiting for the opportune time. They're buying the dip, right? And so with silver, it's when it goes up, people tend to buy more. And when it goes down, people tend to buy less, thinking, well, it's going to fall even more. That's the psychology of the markets. And on a macro scale, especially in China, which is a huge market, and that is what's occurring. And I think it's affecting silver and also other commodities too, such as lithium. Lithium has really been hurt. If you look at the lithium market, it has fallen dramatically. It collapsed from $56,000 to $9,000 in 18 months. You want to talk about a crash? That's a big one. But like other commodities and things, that's not what's happening with silver. It's not crashing like that, because the silver market is very complex and there's not as much demand for it. But in China and around the world, there is demand for lithium. And we're going to be talking to somebody here in the sponsor portion of the video who has great insight and knowledge of such a thing. It is my pleasure to introduce to you Cal Malhi. He is an experienced entrepreneur and the founder of Bull Run Capital. He is the founder of Hertz Lithium, and he was an early investor in Patriot Battery Metals and is an expert in the James Bay region, which is very important for lithium mining. So welcome, Mr. Malhi.
No, thank you for having me.
Well, one of the most interesting, intense topics that we've seen in the past 5 months is the frailty of the supply chains. For the past 30 years, hyperglobalization has created intricate and very reliable maritime and aerial supply chains that span the globe without any friction. But now we have a lot of geopolitical uncertainty and direct conflict in many of the most important regions, like in the Red Sea with the Houthis and pirates in Somalia, and Russia's invasion of Ukraine, along with its cutoff of energy supplies in Europe. Being reliant on other nations has been a problem and is dangerous and is not without its risk. Where is lithium mostly produced and processed compared to where it is consumed?
Well, lithium was mainly produced out of Australia up until recently. Australia has always been a producer of lithium. Recently, Latin America has come on stream with lithium brine being produced. But when you talk about supply chains, the consumption of lithium was largely in China up until recently. and China was the main supplier, the main consumer, and they were the manufacturer for majority of the lithium batteries and a lot of the gadgets that we that use lithium batteries as well. So that's what was the main consumer up until now was China. And as we've all seen, we've saw a big collapse in the price of lithium in the last 6 months to a year. And that goes hand in hand with the collapse in the Chinese economy. We haven't seen that publicized by the communist government, but that is a true fact that the Chinese economy is hurting very badly. Their real estate sector is really in turmoil. And that's hurt the lithium sector as well.
And that's led to the deflation, and that deflation is kind of hand in hand, and that's a very serious situation for sure. So other than what's going on in China, are there any other environmental concerns with lithium where you see likelihood that the United States or some European countries could ban tax incentivize or local manufacturers for sources from, quote, dirty miners?
I think what we're seeing is the emergence of an electric vehicle economy, electric battery economy, and every country's got programs now in place where they're calling it critical mineral strategy to protect critical minerals in their own countries so that they can develop their own economies around those critical minerals. And lithium is on the top of the list for a critical mineral in Canada as well as the US. And we're seeing protectionist measures being taken.
So where in the Western Hemisphere have explorers been able to discover high-grade, low-cost economic deposits of lithium in the past 2 years?
As I said, hard rock lithium was mainly an Australian thing until about 2 years ago. And then the Australians actually, funny enough, came to Canada and started looking for lithium. And we've had major discoveries of lithium in James Bay, Quebec, as well as in Ontario, Canada. But the largest deposit that's been discovered is in James Bay, Quebec, by a company called Patriot Battery Metals. And they've got about 100 million tons outlined already, but the deposit is only explored for a fraction of their size, and they think that could be one of the largest lithium deposits in the world and the highest grade as well in James Bay, Quebec.
Wow, that's exciting. You've been around a long time. Have you personally made money investing yourself in lithium?
I was an early investor, just an investor. We were early in Patriot Battery, but also with Patriot Battery's discovery was I started acquiring the rights to mineral exploration around the Patriot Battery discovery. So we've assembled district scale projects in James Bay that are currently now in Hertz Lithium. We've since changed the name to Hertz Energy, but we have 2 district scale projects that are in the James Bay area.
So can you tell us a little bit more about Hertz Energy?
Hertz Energy, we listed as a public company just last year, last April. And in that time, we put together a strong portfolio of projects. We're not your typical junior miner with a single small scale project. We have multiple lithium projects, one in Arizona, the Lucky Mica. We have 2 very large-scale, district-scale projects in James Bay. We also have a project in Brazil along the new pegmatite belt there. On top of that, we have a technology to extract lithium from hard rock in partnership with Penn State. So within the last 8-9 months that we've been a public company, we've built this very strong portfolio of what we're offering investors. And we also just recently closed a $2.5 million financing that's got us well funded.
Sounds great. And given that, for investors, what would be the clearest risk with Hertz Energy? And in turn, what would be the potential that one could expect as an investor?
Well, the mineral exploration is a very high risk and also a very, very high reward venture. You know, Patriot Battery started out as a stock that was 7 or 10 cents. And with their discovery, it hit a high of $18. But along with that risk, that high reward is the risk that you may not find anything on your property. And we've tried to mitigate that by not being a single project company. Like I said, we've got 4 different lithium projects. We've recently added another project in uranium, which kind of goes hand in hand with our energy focus. And that's why we recently changed our name from Hertz Lithium to Hertz Energy. But being a multi-project company with also a technology focus, I think we're well diversified, and that kind of limits the risk somewhat, it being a mineral exploration company.
Is there anything else that you want to talk about that I didn't ask?
I always like to say that, lithium is a generational investment opportunity, and the biggest money is often made when there's generational investment opportunities. I'm later in life in my age, I'm 56, so I've seen a lot of investment opportunities come and go. I saw the internet bubble come and go, and during the internet, even the word internet was created. Yahoo, Google, those were new words created, and that actually spoke to a generational opportunity. And I think we're now in a generational opportunity with lithium. I mean, lithium was not even a word that many people knew until recently. But also with lithium is, where does lithium come from? Lithium comes from a rock type called pegmatite, and it's a spodumene mineral. So pegmatite and spodumene are now very common words in the mining world. And that, again, speaks to a generational investment opportunity that I think lithium is, as well as EV. Like, EV is a new word that was not known, but I believe it's a word that's for our new generation, and it's here to stay. And again, speaks to an investment opportunity.
Cal, thank you. Can potential investors reach out to you personally and get their questions answered?
Yes, my name and contact number is on all our email, our news releases, also on our website as well. So investors are free to contact myself or any of our other executives on our team.
I'll put a link to those in the description below. Well, Mr. Malhi, thank you so much for taking the time to answer these questions for us.
Okay, thank you for having me.
So back to silver. Silver is a metal that I think in time, maybe not as dramatically affected as lithium in terms of deflation. I think it is playing a role and part of what's keeping it down. It's crushing the price, especially compared to its potential to its all-time highs. But again, remember, those all-time highs for silver, just anomalies. And you look at the periods immediately preceding and after, silver's price did stay up for a while, but it started to decline. And then we had a very stagnant period of time for silver. And essentially, silver's price was kind of depressed to the point where there just was not a whole lot of excitement in the silver market. But see, in the end, silver will conquer deflation as well as inflation, because I did a video about that very topic too, how silver and gold can protect you during times of inflation as well as deflation. So I hope you will check that out. I'll post that here at the end screen of this video. So hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.